Good afternoon, traders. Good afternoon. This is Daniel with VantagePoint AI. Welcome to today's live session, and we're going to use AI to improve exit timing with stocks and options. And this is a topic that I get asked about on a consistent basis. So thank you for being here. Thank you for being here. We're going to get everybody into the room and make sure everything's up and running. Make sure you can hear me okay. If you're in the room and you're in the session, I'm going to just try to put a little hi in the chat to make sure the chat is working. If you could make your way over to the chat and let me know everything is working on your side of things and you can hear me okay and everything is coming through from a screen and a voice standpoint. Hey, Sharon, thank you for jumping in there. Good afternoon. We're just getting things off the ground here. So if you're in the room, if you're in the live and you're with me and you're here and it's working, give me a little hello or a hi. Hey, Nick, thank you. DJ in the room working for you. All right, I got my eye on the chat so that this way I can see how things are rolling in. I also have my team backing me up. Thank you, Mike, and our incredible team at VantagePoint for doing everything that you do. Amika, Chris, good. As people are getting in the room and getting going, I want to let everybody know VantagePoint headquarters is in Wesley Chapel, Florida, which is in Tampa. And thankfully, our headquarters were spared and we didn't receive any damage here at our office. Unfortunately, with 75 employees scattered throughout Florida and other states, but the ones in Florida and the Tampa area, we did have some power outages and things like that. Some flooding and some people still dealing with Hurricane Milton, but I can tell you our team's spirits are high. We're excited to help as many traders as possible. And I can assure you, it's business as usual for us at the VantagePoint team, and we are dealing with the things that we have to deal with on the side. And a lot of people have sent in well wishes. A lot of people have sent in messages about saying hi to the team, and hopefully everybody's sending good thoughts our way, and we appreciate that. Thank you. We call our VantagePoint users VantagePoint family for a reason, and it really felt that way with all the messages we were receiving. All the things that we've got to deal with from the storm, we will certainly deal with, but we will be here to provide you support, training, and incredible artificial intelligence software for as much as we can. So again, thanks for all the well wishes and for being here. Hey, Barney, Greg, Phil. Hey, Phil. Well, I'll be seeing you in a week and a half? Glad you're here. Phil's coming to our in-person summit here in Tampa. Going to be an incredible training event. So, enough of that. Thank you for being on time. We are going to dive in. Let me change my screen here. And the reason I think today's session is a valuable session is because we have a lot of traders that ask about using artificial intelligence for exits. We know that exit timing issues are one of those things that can just rob traders of either gains, potential gains, profits they already had just by mistiming that exit. So with the market being as bullish as it had been for the last couple of months, I think it's a great time to talk about exit timing strategies. So what we're looking at on the screen right now is we're looking at eBay. We'll do some analysis on eBay. I've got a ton of charts we can do analysis on. So as we get deeper into today's session, we can certainly dig into some of the other tickers that you're interested in. Let me just get my pen going here, make sure all that is working fine. Okay, so you can see we're talking about eBay. I'm going to go through the analysis. I'm using the artificial intelligence software in VantagePoint. You can use whatever software indicators you want to use, but I can tell you that this is the tool and the software that gives the biggest edge, the biggest advantage. I've been using it for 15 years, and for those of you that I haven't talked with before, welcome. Welcome. My name is Daniel. I'm with VantagePoint AI. I've got 25 years experience in the financial markets, almost 15 of those right here with the VantagePoint software. So let's talk about exits. And the reason I want to talk about exits is I believe any good trader thinks about their exit strategy before they enter their position. Right? Think about what I said there. Trading is about managing risk, right? We know that there is risk involved in trading. There is no change there. You shouldn't be trading with money you can't afford to lose, right? We're going to walk through different strategies. This is purely education. I'm not an advisor, but I can tell you, if you're thinking about your exit before you think about your entry, you're going to find yourself in a much better position at the end of the year when it's all said and done. So Let's talk about what I mean by that. When I talk about exits, I've got 3 different ways that I'm looking from an exit standpoint. Number 1, stop loss at the beginning of the position. When I'm talking about exits, whether it's a mental stop loss, a visual stop loss, I wrote stop less. How about that? let's turn that into a stop loss instead of stop less. But I guess it means the same thing when I really think about it. The other thing I want to think about is targets, right? When I think about targets, I mean when I get into a position, there's a certain amount of money or gains that I'm happy making in a position that I can set a target. That doesn't necessarily mean I exit the entire position, but I should have a target shooting strategy, something that says when I get to my target, I can do A, B, or C, depending on what kind of trade I'm looking at. That's another way to manage your exits. And a third way is purely technical analysis based on risk, right? I'm going to do some technical analysis using my indicators, and if I've already passed my target, I haven't hit my stop loss, and there's enough of a scenario that's convincing me it's time to exit this thing, then I can certainly exit this thing. I'm going to cover all 3 of those things when we talk about exits today, and different ways you can apply them using whatever tool you're using, or apply them to the VantagePoint software. And before I dig into those 3 items here, we're talking about stop losses, we're talking about finding targets, and then we're just talking about managing positions using predictive technical analysis with artificial intelligence. Before I dive into that stuff, I'd like to get a sense of who we have in the room. So if you're in the live right now and you're by your chat, just let me know if you're new to VantagePoint. If you have the VantagePoint software and it's something that you use, just let me know in the questions box, the chat box, and say, yep, I'm a VantagePoint family member or a user or whatever you want to do to let me know we have. If not, just tell me you don't have it. And then this way I kind of can gauge from who we have in the live what level I walk through these details with. That'll help me out a lot. So if you could do that in the chat, that would be great. I'll give you a second to do that. The important thing is that in this session today that you walk away with some strategy or some technique, something you can utilize to help improve your results, especially when it comes to exit timing issues. Personally, when it comes to exit timing issues, that's one of the hardest things from a trading standpoint. Why? Because you're trading the markets to make money, right? And if it's going in your favor and you want to make more money, right? Call it greed, call it success, whatever you want to call it, that's why you're trading, which is what makes the exit so hard, right? And you could have a couple of different exit timing issues. Early exits, I don't know why I'm writing on the screen so much today, but it doesn't really say early. But if we talk about early exit, there's also a late exit. So late exits and early exits are 2 exit timing issues that have equally negative effects. Hey, Greg. Yes, Michael, fantastic. Part of the VantagePoint family. Yes, Lemon, thank you very much. John and Sharon don't have it yet, but that's good. That means I've got, I'll deliver the information at a level that I've got some people that don't have it can understand it. So William, thank you for being part of the VantagePoint family. That's fantastic. If you've just joined the live, by the way, we are going to be talking about exits. We are talking about exits today. So thank you for the VantagePoint family members that, part of the VantagePoint effort here. And for those of you that don't have it, thank you for being here. That means you're interested and motivated in helping yourself, helping your trading, learning something new. Hey, Markery, don't have it. Okay, Melissa, got it. Yes, you were. Yes, you were. Hopefully we'll see you at a new one. So that's great. All right. So we're talking about eBay. You can see eBay, the chart we're looking at here is about 3 months. What I started talking about is identifying an exit strategy before you identify the entry strategy. Now, what I know is the artificial intelligence in VantagePoint indicated a bullish cross here. Let me back up for a second. This is a predictive indicator. This blue line, the artificial intelligence has done analysis around the world. It does global intermarket analysis, which is a patented process to figure out when the trend is expected to move higher. Hey, Denny, nice to see you, my friend. I see you in the chat. Thank you for being here. Thank you for being part of the VantagePoint family, too. It's great. So what we're talking about here is the blue line going from below to above that dark gray line or black line, and the shaded area going from red to green. That's where the artificial intelligence in the software is indicating a bullish opportunity right there on that day. The first thing our VantagePoint users do after they see that is check the neural index. Take a look at the neural index to see if it's green and bullish as well, so that this way you can see whether or not strength is expected to build over the next couple of days. So I've got a bullish trend prediction, I've got bullish strength, and then I look down here and see if I've got my momentum indicators pointed up going into that day. If I've got bullish momentum along with my trend and my strength, then I know I've got a great opportunity. Now, the earliest opportunity I can get into that position is the open the next day, so I'm going to just go put a line on the open right there so everybody can see it, right? And for those of you that are more conservative and you're saying, okay, the open the next day, I see the cross, call it 54.66. 54.66 is the earliest I can get into that position on the open if I do a market order for the open, which in my opinion, this is purely my opinion, right? Market orders are dangerous because of gaps, but limit orders are much safer. So something to think about there. Or you're watching the market open and grabbing it, hitting the button yourself rather than setting an advanced order. Regardless, that's the earliest opportunity I have. I can see that the open of that day was 54.64. Okay, so let's talk about a stop loss. 54.64. Let's factor this off of 100 shares of this. 100 shares of eBay. If I'm going to do 100 shares of eBay at 54.64 times 100, doing the math on that, that's $5,464, right? If I'm willing to lose $1,000 every single time I trade, which is 2% of a $50,000 account, just as a hypothetical account situation, that means I'm willing to give up $1,000 of that, taking it back to 44.64. Now remember, I have 100 shares. So that means my stop loss would be at 44.64 if I was willing to max loss $1,000 based on a 100 share position. 44.64 is off the screen, but I could set my stop loss down there. That is one strategy for getting into a position to say, you know what, before I ever enter this position, I'm willing to lose $1,000 if I'm wrong on a 100 share position. That's down at 44. Or another stop loss strategy is using the low of the last 72 hours as a potential stop loss. Now that gets way inside my $1,000 on that position. But that's also another strategy that traders use to say, you know what, I was wrong early enough into this, which would be here. I was wrong early enough into this that I'm willing to exit that position at the low of the last 72 hours. I am going to turn that line red. That's the low of the last 72 hours. So basically we walk through two different strategies for setting stop loss. One off of my max loss, which would be $1,000 with a 100 share position here. One off of the low of the last 72 hours. Now remember, I haven't entered anything. I just know that the prediction from VantagePoint said that on 7/29, I've got a bullish trend expected to start. My earliest entry is the next trade day. I need to know before I ever get into that position where my exit is based off of a stop loss. Okay? Based off of a stop loss. I've got two different ways to calculate it. My max loss of 1,000 or the low of the last 72 hours. There's a third way to calculate that, and that is ATR. Anybody here familiar with average true range? If you use average true range or ATR, you can use that calculation to say, you know what, if I get a 2.5 times my ATR, which means the range of the day for the last 10 days is 2.5 times what it usually is. Let me show you. I'm just going to go range and go ATR and pop it on the screen here. I can go on that day and see that the ATR was $1.13. 2.5 times that, 226. Let's call it $2.50. $2.50. Let me bust out my calculator, right? We said on that day, the open of that day was 54.64. 54.64 minus $2.50. What I'm doing is calculating, oh, let me put my calculator over here. 52.14. That's 2.5 times ATR on that day, which means I can also use that to say, you know what? If It's 2.5 times the average range, means the size of the candle. For those of you that are unfamiliar with ATR, it measures the candle size, how big the candle is, and it's looking back, depending on how you have it calculated, over the last 10 days, 14 days, 20 days. And you can see in this case, it's giving me the exact number of $1.08. That's the average size of the candle based on ATR. Well, 2.5 times that says $2.50, which means I'd have a little bit more room. Just for screen's sake, I'm going to use the low of the last 72 hours and say, okay, if I get into this position with 100 shares, that's a $5,400 position. If it comes down to the low of the last 72 hours, I'm out. That's an exit strategy that you can use to protect your downside. Now, let's talk about gains to the upside. What is a percentage gained on a certain position? I'm not talking about options, folks, but on an underlying position. If you made X percentage on that position, what would make you, quote unquote, happy according to your trade plan? Do me a favor, go to the chat box right now and tell me, look, if I make 5%, maybe it's 5% for you, maybe it's 10%. I am not talking about options. I'm talking about buying the equity, straight up stock, underlying asset. What would be your target to say that was a successful trade? And if you don't set a target, write that in the chat box as well. Say, I don't set targets. I just let it run until it runs, right? That would be an interesting conversation as well. But I'd like to know, based on who we have in the room, what is your strategy for taking profits, finding the exit from a profit standpoint? Sorry, I had to get a drink of water. It's 4:20 in the afternoon, long day. Been doing a lot of talking, but while I'm thinking through this process, I can tell you a lot of the traders that I've had the pleasure of working with a lot of very, very successful traders. Lou Mendelson, Larry Williams, so many traders in the past that I've talked to and worked with on different strategies related to managing positions. 3% says Bill. VRSCE says 25%. Okay. Where does your target fall? And if you don't have one, write that in the chat. And by the way, if you can't tell, this is a live session. I'd love interaction. I'd love to be able to go back and forth with you and understand what you're thinking about from a trading standpoint. Maybe I can help from an educational standpoint. Maybe not, but at least let's get a good conversation going, right? Based upon the percent return on the risk. Okay, no target set for John. Thomas says, I like 10%. Limon says 50%. You want the underlying asset to increase 50% before you say, I've made enough? That's pretty big. I'm not judging, just surprised that it would be that big. Now on an option, different story. I'm talking about the underlying. Michael says 7%. Go Girl says, I keep an eye on momentum and candlestick patterns. So you're talking about using technical analysis to find an exit, which means you don't set a target. Denny says, I let it run until I'm happy. What is happy? What percentage can I define happy with, Denny? I love it. Okay, so 3, 25, 10, 7. It's probably around that 10% average if I'm just looking at people that have put it in there. Go Girl says, I want to make at least $100 per trade. And the reason I use a percentage, Go Girl, is simply because a $5,400 trade like we're talking about here in this example may not be a trade that you would take, right? So $100 is a different, it's all relative is what I'm saying, which is why I use percentage. So thank you for jumping into that. No target. I don't know how to set stops. That's okay. We're walking through it right now. You don't have to set a stop. You can just use your mental stop to say, if this stock comes down to 53.10, then I close my position. I don't have to do anything in my platform except for exit the position. Now, there are ways you may want to reach out to your broker and figure out how to set stop losses in your platform. But even if you can't or don't know how, you can write down in your log, your trading journal somewhere, that 53.10 is your, or if you're using the VantagePoint software, you can do just like I did. Put a red line on the chart and just say, if it comes down to this red line, I'm out, right? 5 to 10%. Let me see what that says. Something's blocking my screen here. What is that? All right. 5 to 10% on an asset, but I do mostly trade options. I thought that was the case. $100 makes me feel good. I don't disagree with that. I also like $100 no matter how I get $100, right? Benjamin Franklin's on the $100 bill, and that's why he's my boy Ben, because he can come over anytime. 5 to 10%. All right, so I'm seeing kind of the numbers I would expect if I average it all out. It's about, let's say 10%. If I can make 10% on a stock, the underlying asset, not the option, we'll dig into options in a second, well, then I could be, quote unquote, happy. All right, so I've got 54.64, 5,000. Let me get my calculator out so I can make sure well, it's probably an easy one, right? $5,464 in this position times 10%. We know we can probably do that math without it, but I'm doing it on the screen. 546 plus 54.64. That means $6,010. Divide that by my 100 shares, and that'll tell me what my target is. $60.10. This is one way to set your positions. $60.10. All right, let me put a line at 60.10. I'm going to go in here, go to my properties. I'm going to make that line green. And I am going to go 60.10. All right. And now when I hit apply, it's going to put a green line on my screen. Now, let me do something here and just fashion what this would look like at that time, because you can't see this really great chart, right? I'm just erasing the days. There we go. There's my entry position of 54.64. I just zoomed in on it just so we can see the crossover and we can see everything as it happens. So we're in that position with a stop loss at 53.14. Now, as I add a day to this, I can see that it moves higher. It moves higher, then it comes lower. But it never comes down to that red line, that stop loss that I set at 53.14, whether it's a physical stop or not, that's up to you. And it moves higher. Every day I download my data. Now, what I'm looking at is the right-hand side of the chart. Every day that this blue line stays above that black line, I don't really need these just yet. But every time I see that blue line cross below it, then I need to consider whether or not that's an exit point. So I'm going to roll forward a day and just say, all right, blue line's still above. It's going sideways. Got a little weakness going on. That blue line is saying I'm expecting some sideways trend, but it's still above the black line, and that shaded area is still green, which means I still have bullishness left in the trend. And my stop loss is pretty far away from where prices are right now. Back to my ATR. Let's take a look at my ATR, because price has moved away from my stop loss. Now I got to think about locking in break even. $1.34 is the ATR. 2 times that is $2 and call it, what is that? 268 plus another 50%. Let's call it $3. $3. Well, the close on this day was 55.76 minus $3 would be 52.76. If I wanted to move my stop loss up, I could, just not yet, using 2.5 time ATR. If I'm comfortable with the fact that I'm into some sort of profit here and I want to move my stop loss up to my entry, I can do that as well. Your trade plan should define for you what helps you move your stop loss. Traditionally, 2.5 times ATR is what I'm thinking about from a stop loss move standpoint. So we're putting this back at 53.14 where it was. Not time to move the stop loss yet. By the way, I'm just trying to visualize for you a good strategy for applying this for exits. Another day, so we had a gap. It pulled back, but still moving price a little bit higher. Oh, price came a little bit lower, almost to my entry, but not quite. And then boom, the blue line never crossed below. I can pretty much hide this. You know what, I am going to hide it. I'm going to hide this stuff right now just so you can see what I'm doing. All I'm doing is every day at 6:30 p.m., this is the way my software works, is it updates the forecast for the next trade day. And if the blue line is above the gray line, that's telling me that there is still bullishness left in that trend. I don't have to worry about anything else until I get a crossover to the downside. So this is predicting bullishness still. Roll forward, still predicting bullishness. Still, oof, that is a nice move. You see something like that, now you start thinking about, okay, now it's time to lock in some profits. ATR, $1.35 times 2, that's $2.70, plus another 70, let's call it. So we call it $3.30. I'm just giving you round numbers, right? Without using my calculator. Well, we had a close of that day at 58.68. 58.68 minus $3.30, 55.38. That means if my stop loss strategy is 2.5 times ATR, I can go to 55.38 and be comfortable around that stop loss. Let me get my numbers here. There, I'm just sliding it manually. Close enough. All right, now if prices come down to that, I can exit that position and lock in a gain because my entry was 54.63. I haven't hit my target yet. I don't need to use my technical analysis, in this case my predictive technical analysis, to exit that position. I'm using a stop loss strategy at this point. The question you might have that you're not asking is, at what point do I switch from a stop loss strategy to managing that position? And that is the point at which your leading indicator, your primary indicator, the first indicator you look at indicates some sort of consolidation or bearishness to the point that it says, okay, now I need to look at my other indicators to make a decision. Okay? So I can't tell you a date, I can't tell you a price, but I can tell you, you should have one indicator that kicks everything off. For me, it's my blue line. It's my predicted trend line. That's the blue line, the predicted moving average and VantagePoint. That's the first indicator that's going to kick everything off for me to do my full AI sentiment checklist. And for those of you that don't know what that is the process we teach here at VantagePoint that gives you the ability to look at as many indicators as you want and determine whether or not that overall move is bullish, bearish, or consolidated by taking almost all of the emotion out of it, okay? And if you've got more questions about that, or you got questions about anything I'm getting into, you can always go to VantagePointForecast.com. If you don't have VantagePoint, or reach out to us, we'll be happy to talk with you. Or if you do have VantagePoint and you're part of the VantagePoint family, call your instructor. Call us in VantagePoint University and ask about the AI sentiment checklist process. We'd be happy to dig into that with you, all right? All right, so another day comes in, another moves higher. Somebody said, I would move my stop loss amount higher. You could, but what is your rule that is telling you to move it higher, go girl? And that's one of the things that creates really good consistency is rules-based training. The rule that I'm applying here is at least, my stop loss is at least 2.5 times ATR, the average move for a day for the last 14 days, right? That's my rule, so I don't have to think about whether it's too close or not. Can I move it according to ATR every single day? Yes, absolutely you can. That's up to you, right? Not necessary for me, but everybody has their own strategy. Either way, my stop loss is at 55.39. That's the red line that I put on the screen. And my entry was at 54. We said 64, so it's a penny off, but you get the point. Next day, I'm rolling in. Got some bullishness. Regardless, the blue line is above the black line. My predicted trend indicator is saying this trend is still expected to be bullish. But one thing I noticed is that the gap between that blue and the black line is the biggest gap that I've had the entire trend since the beginning. That rubber band is stretched further than it ever has been since the beginning of this move. I have to be ready for a little bit of retracement, reversion to the mean. Got to be ready for it, which is why the stop loss that we have at 2.5% at this point of ATR, 2.5 times ATR, excuse me, for me is a comfortable place for a stop loss, right? So let's roll through. Let's keep on going. Add another day. Here's another big move. So we had a sideways move and the overall trend kept moving higher. There it is. There's that pullback, that reversion to the mean. That is when something gets overbought, overstretched, overextended, and the bulls take some profit. That's what happened there. The gap between those lines getting that wide identified for me early that that's something I can expect. It's nowhere near my stop loss. Great. Let it roll. Another day, there we go. We're starting to get some settling. The blue line is moving sideways across my screen. A lot of people will say, well, Daniel, the blue line pointed down. Well, yeah, it's never going to go straight up. It never crossed the black line. The shaded area never went from green to red. That means my leading indicator, my primary indicator, has not indicated for me it's time to execute my full strategy to determine if it's time to manage this position from a predictive technical analysis standpoint. One thing I want to point out, remember the target that we set at 60.10. Price is getting close to that target at 60.10 on the underlying asset. Okay, let's keep it rolling. Higher, higher, I'm going to speed it up. Higher, higher, higher. Ooh, look how close he's got. A lot of people would say, ooh, that might scare me away. I didn't get across to the downside. Doesn't scare me away because that's my leading indicator, right? I can clearly see that momentum has shifted a little bit, but I also see ATR is dropping. As ATR drops, trends tend to continue bullish. So I keep on riding that trend because I've got a stop loss at 55.36. I've got a target at 60.10, and now prices have moved higher. This is the point where I've got a new support point set. I can see that I've got new support right here at this level, and I decide, okay, it's time for me to move my stop loss up right now because this support point means something. Price is higher here, 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 and here. Okay, time to move my stop loss up. What is my ATR on this day? Let's look. ATR on this day is $1.08 times 2. That's $2.16 times another 50 cents. Call it $2.70 just for easy numbers. So we're at price close on this day is 59.20 minus 270. Where's my trusty calculator? 59.20 minus 270. 56.50. All right, let's move that stop loss up to 56.50, and I'll show you VantagePoint users how to do this the easy way. Right click on that, go to the properties, and just do 56, what was it, 60? Apply. All right. Now I've got a stop loss that's moved up. If prices come back to that, the difference between that and where I entered that position, we know is not 10%, but you can see that that's about a $2 gain. Pretty nice if I get stopped out there. Now some people might say, you know what? I'm going to tighten my stop closer than 2.5%, 2.5 times. Sure, you can. But where I'm a bigger fan of tightening stops is after you've hit your target. That's just my point. Could be wrong, but that's just my position on that. All right? So let's roll it forward again. Boom. Target acquired. We have hit the target. At that point, you should have a rule in your trade plan that says when I hit my target, I do X, Y, Z. Some people's trade plans say when I hit my 10% target, I exit the position and then I decide the next day if I want to re-enter it or go find something else to trade. Some people's trade plans say when I hit my target, I take half of that position off and I let the other half run. That's up to you. Some people's trade plans say when I hit my target, I tighten my stop to the low of the last 72 hours, and then at that point, I let that thing run. Your strategy is your strategy. Just make sure you have one. This is eBay, Henry. Henry's question is, what chart are we using? This is eBay. This is the latest trend that's been going on eBay in the VantagePoint software, okay? All right, roll forward another day. The VantagePoint software, right here, there we go. We're up at 60. The close is 60.73. Fantastic. Look at that close. That thing jumped up 63.22. I've got a level at this point now where it's like I've hit my target. Time to tighten up my stops. I'm going to use a low of the last 72 hours. I can drag this line right up to the low of the last 72 hours. It's now 59.18. My entry was 54.64. Okay? We're going to go through another day. Moving higher, moving higher. I've got a new low of the last 72 hours, and I move up my stop loss to there. Moving higher, pulling back, sideways, boom. Hit my stop loss, 62, the low of that day. Let's go to the worst case scenario, 62.25. 62.25. Let's bust out our trusty calculator to see how we did. 62.25 times 1,000 shares, right? Sorry, I said 1,000 shares. I did 100 shares, so let's go back. 62.25 times 100 shares. Pretty nice. 6,225 minus what it cost me to get in, 54.64. $761 gain using my strategy for stop losses to exit that position and my strategy for targets. Stop losses and then targets. Two different ways to use to exit the position. Any questions on that so far? Am I using trading bots? No, Henry. VantagePoint AI is not a trading bot. It's artificial intelligence that forecasts the trends with predictive patented indicators, but you make all the final decisions around your entries and your exits. So all the final decisions. Heck, nobody cares more about your money than you. Bots right now are not... I've talked to a lot of people who have lost a lot of money with bots, unfortunately. All right, let's get rid of all those lines and let's walk through this using technical analysis. No stop loss, no target. The let it run mentality, right? The let it run mentality, when we see this, is look, I have a leading indicator and it is my blue line. My technical analysis is telling me something. My technical analysis is telling me this trend is still expected to keep going. I don't have to exit this position or even think about it until I get across to the downside. When that blue line crosses and that shaded area turns from green to red, that helps me understand my predictive technical analysis and VantagePoint is saying, okay, this trend's predicted to reverse. Profit-taking opportunity is a good time. So let it roll forward. Blue line still above, still above, still above. Still going higher, still going higher. Now, some people might say, well, Daniel, you got out after this move down. You're leaving all this money on the table. From a trading consistency standpoint, the way I look at it is I locked in over 10% gain, right? It was $761. My position was 54. Oh, back it up, back it up, back it up. 54.64. That's almost a 14% gain. Almost a 14% gain using the strategy we just walked through. I would look at it and say, that's a 14% gain, not money left on the table. However, if eBay is something that you like to trade and you exited that position on 920, well, then when you download the data the next trade day, you can see that the blue line is above the black line. Use your same strategy. Blue line is above, neural index is green. Uh-oh, my momentum is not pointed up. That means my momentum indicators are not giving me the confidence that I need to re-enter that position. This is not lost gains. This is unnecessary risk using the strategy that I used. Now, if I'm using the let it run strategy, because that's how my trade plan is set up, then sure, I'm picking up these until I get across to the downside. And if I roll through all the way through to today, let me just make sure we're on today's date here. Yep. All the way through to the prediction for today, I don't have a cross to the downside. So if I maximize that opportunity and I'm using the let it run, great. That position right now from where we talked about entry to now is up 22%. 22% as of the close yesterday. Looking at the close today, I don't know where it closed, but I think the markets were down here at the end of the day. Let's go to the predicted low of the trade day. 21% still to this position. And I'm letting it run. Why? Because I don't have a crossover to the downside. If I had a crossover to the downside, then I can exit that. Let me see if I can, let's see. Oh, you know what? Tesla. For those of you that don't use VantagePoint, this is what I mean. Here is a chart for Tesla. Take a look at this move right here. Oh, went too far. Sorry about that. Take a look at this move right here. This is what it looks like when VantagePoint says, okay, we got to cross to the downside. If you're riding this trend from that crossover and you didn't get your stop loss hit, you didn't hit your target. Let's see, do we have 10%? Crossover, waited for our entry, right? Didn't get our stop loss hit. At this point, the close of this day, let's see what the percentage is there. Whew. Probably got taken out at that 10%, which is perfectly okay. But if not, if your strategy is let it run, the blue line crossed below, the neural index was red, the predictive differences were pointed down going into that day. My proprietary indicators in the VantagePoint software said Tesla is expected to start trending down, and this day was 10-2. This is using my technical analysis, my predicted technical analysis and VantagePoint to manage that position, not a stop loss, not a target, and I don't have to think twice about it. My leading indicator says this trend is expected to reverse. My supporting indicator, the neural index, says, yep, there's bearish strength in this. And my momentum indicators are in agreement. I'm done. Out. Over. Great move to the upside. Worst case scenario, we'll go to the open of the next trade day. 9.65%. Really positive move. And guess what? Look what happened at Tesla. VantagePoint's predictions kept me out of that mess, or maybe shorting it or buying puts, whatever the case is. The stop loss or the exit strategy is a strategy that can really help you maximize your exits, and you got to think about it before you get into your position. So again, let's talk about what those strategies are. Using a stop loss, whether it's a stop loss off of an old low or ATR, up to you. Setting a target and using your stop losses in conjunction with your target. Or letting your technical analysis, your predictive indicators and VantagePoint, or whatever indicators you're using, identify that there is a trend reversal on the horizon. I will warn you that the indicators that are not in VantagePoint, those are lagging indicators. They're not predictive. They're not proprietary. You can get them for free pretty much almost anywhere, right? Henry says, as long as the blue line is above, the blue line is all good, right? Henry, I love the simplification in your response. All I can say is yes. If the blue line is above the black line and that shaded area is green, that's indicating a bullish trend is expected. When the blue line crosses below, that's a bearish trend expectation. I then layer on my other indicators to get my confirmation. My AI sentiment at that point is 100% bearish. I don't have to think about it. I can layer on 150 indicators, and I look at them individually, and then I do my AI sentiment process, and if it's bearish, it's bearish. I don't have to think about it. Yes, you got it. You do have it. You do have it. Marcy says yes. Not sure what your yes is too. Let me see. The VantagePoint does not help day trading in past data. If we consider Crowd or AMD, there was no indicator. I have AMD in here. Let's look. Let's see what Ravikant is attempting to say. You're telling me that the predictive indicators in VantagePoint did not give you any indication about what AMD was expected to do today? Are you sure about that? Look at the software. These are really great trends in VantagePoint, right? Yes, ATR is available, VRSC, Versi. Yes, it is available in VantagePoint. It's an add-on indicator. So let us know if that's something you want to add on, and we can certainly reach out or give us a call. Our phone number is in the chat, and we can help you add it. This is for Ravikant. VantagePoint, blue line crossing below, neural index red, predictive high and low saying AMD was expecting to be lower, momentum saying bearish. Would you see AMD falling today? Oh, thanks, Marcy. That's great. Great. Thank you for getting involved in that. Yesterday was a nothing day for AMD, my friend. Yesterday was an inside bar for AMD. The blue line being above the green and pointed down tells me there's consolidation happening. There's been consolidation happening for 1, 2, 3 days. Today, we got something different, or I should say last night at 6:30 p.m. Eastern time, we got something very different, my friend. And if you're day trading it, let me show you something. I'm going to zoom in on this because if you're day trading it, you can switch to the one-day prediction and understand when did VantagePoint indicate that there was some bearishness in AMD. That is 10/10. That is last week. That is, what day is that? Hold on, let me look. That was Thursday. That was the day I woke up with my roof shredded from Hurricane Milton. So last week, and I'm laughing about it just because that's all I can do. 10/10, the blue line crossed below saying AMD was expected to fall. So yes, absolutely, 100%. It sounds to me like what you're saying is you expected the predicted values, because he said the predicted value is not correct. So VantagePoint saying down, 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 and it going down a whole lot further than was expected. If that's how I'm wrong, I don't mind being wrong when it's so right, my friend. So I love what you're doing. I love what you're trying to do, but just understand, this isn't a new technology. This analysis isn't new. Unfortunately, what you're looking at is trying to find a way to prove that it doesn't work. It's been working since 1991. It's been helping traders like you and everybody that's on this call for the last 33 years. That's all our company has been doing for over 3 decades. Our founder created this starting in 1987, and he started using it for personal use. So it's been put through the ringer, it's been tested, it's patented. So I understand your concern for how right it is or how good it is, but nothing is perfect. I never said this was perfect, but it's safe to say it gives you a major, major leg up, and you need an edge to make money in the market consistently. So thank you for being involved in the conversation. Unfortunately, you're just looking at it all wrong, my friend. And that's not for everybody here. That's for Ravikanth. So let's move on. Ooh, it's 4:48. Man, I went a little bit slower on that explanation than I expected. I have a ton of tickers in here we could look at. But if there's a certain ticker or a certain stock that you want to take a look at, by all means, put it in the chat box. We're talking about stock and options. From an options trading standpoint, let's talk about how to maximize. Here's Salesforce. Same exact strategy. Well, you're putting some tickers. When you're putting some tickers in here, I'm going to show you the same exact strategy that I would use, right? I see. So you need help learning how to use it for day trading. Give us a call. There's a very specific day trading strategy. That is not today's strategy, but I'll tell you what, call us, work with your instructor, and we'll show you exactly how to use this for day trading. That's not what we're talking about today, but we'll help you. Don't worry. All right. Options trading standpoint, 912, same thing. I got to think about my exit. What is my win rate? What percentage do I need to win in order to be successful? Some people use 50%, some people use 30%, some people use 100%, right? Regardless, everything is the same except for at the entry point, I still need to understand what my total loss is. Options, if I'm willing to lose $1,000, then my entire position needs to be $1,000 because that could evaporate to zero. My entire position needs to be $1,000. One call contract could be $1,000, right? Maybe not on Salesforce, maybe on something else, but I can tell you that going into an options trade, use your R, your risk level, the amount of risk as your position size. That's not advice. That is just education from an experience standpoint. If I'm willing to lose $1,000 and my total position is $1,000, then I don't have to worry about a stop loss. I don't. I don't have to think about it from that standpoint. If I'm willing to lose $1,000, great. I can enter that option, and if it evaporates to zero, I lost as much as I'm willing to lose every single time I trade. Which means I can have a let it run technology. I can have a let it run process. I can have a let it run strategy with that. Which means, how do I do it? Here we go. 912, I see that crossover, I see the neural index, I see the predictive differences, very clear, okay? Very, very clear. It's there, it's on the screen. Here's the crossover. I've got my entry point, I've got $1,000 I'm willing to throw at this. I can enter that position. Let me just take a look and see where things are right now for CRM options chain. Let's look. May not be something that I can do with $1,000. If I set my expiration out, I'm just going to use the November expiration and see what I've got at my disposal here. $8.60. Yeah, good. There we go. If I buy just in the money at $10, $12.15, I'm right around that $1,000, $290. Okay, this is something that with $1,000 maximum position I could take advantage of, right? Here we go. Find my entry point. I set my expiration out 45 to 60 days. 45 to 60 days. Maybe 30 days, right? If you do 30 days, it's going to move a little bit more aggressively and you can make more money quicker, but it's up to your strategy. I'm going to set it 45 days, which would take me to the October monthly expiration. October monthly expiration is coming up next week, if I'm not mistaken. Oh, Friday. This Friday, the 18th. So I'm buying an October 18th call, right? At this point, I like to buy at the money. So I'm buying a 255, 254, 253 call, whatever's available for me at that point, depending on my delta. I like my delta to be a 50 or a 60 delta, right? And from a volatility standpoint, Got to make sure the volatility is right for buying options, but let's say it is. My expiration is Friday the 18th. $1,000 got me into that position, 1,100, 1,200, whatever the case is. I can ride that trend until my indicators say, okay, that trend is coming to an end, or I get to expiration. Either way. Why am I looking for one or the other and I'm not waiting all the way till expiration? Some people will say, well, I let it run to expiration. I'll tell you, time decay. If I get a crossover to the downside on VantagePoint before expiration and I decide I want to hold it longer, all I'm doing is giving my profits away to time decay. So if I get that crossover at any point in this bullish trend, I close that position, I sell that contract, I take advantage of the intrinsic and extrinsic value, and I'm on to find something else having a negative impact on time decay. Look, I'm not looking or expecting to hold a position for 45 days. I'm not. If it happens, it happens. That's the let it run strategy. But I'm not expecting it to happen. I'm expecting that at some point, VantagePoints indicate within that 45 days that that trend's expected to go down. I'm done. I'm out. I move on, and I reduce time decay. There you go. There you go. Love it. Love what you're thinking. I didn't have a crossover anywhere here. Did you say you exited that, Lemoyne Turner 10 days earlier? I don't know. I don't know what you mean by that, but this is running and oh, you're talking about exiting it 10 days before expiration. Yeah, you could. You absolutely could. The closer you get to expiration, the faster time decay hurts you. That's an important thing to remember, which is why if you're letting it run all the way to expiration, you're increasing your risk in giving back some of those gains dramatically. Now, if you have a 50% target on it and you hit your 50% target, that's a different story. It's like, okay, you know what? I've hit my target. I don't want time decay to take my money off. I can take off that position and close it out with a 50% winner. That means on $1,000 or $1,100 investment, I made $500 or $600. Not going to complain about that, right? A lot of different ways to slice it. All right, we got some tickers in here. Let me see. ELF and M. ELF and M. ELF. M. There we go. All right, so we got two. Let's go back to ELF. That's ELF. That is this one right here. We can see that there was a long bearish trend, and then we got a fresh bullish crossover on ELF right there on 10.10, right? Looking for an entry the next day. You get an open the next day at 107.11. 107.11 is a good entry on that position. I can use a stop loss of the last 72 hours, 1, 2, 3, and say if it gets down to $100.69, I'm out. Or I can use, again, same thing, ATR. From an exit strategy standpoint, at the point that I enter that, $4.49 times 2.5 times that, call that 450. That's 950. I'm just doing math out loud. Sorry. $12, right? $12. So 10, the entry point was 107 minus $12. Let's call it 95. So if I'm using that stop loss down to 95, then you can use that strategy. If I'm using the stop loss of the last 72 hours, remember, I haven't entered anything yet. I'm just figuring out where I cry uncle. If I use that that same example of $1,000 with a $50,000 account, let's pull out the calculator. Not going to be a 100 share position, right? Call it a 50 share position times 107 for easy math. $5,350 minus $1,000 divided again by 50 shares. There we go. We got our stop loss at $1,000 loss. We know it's well below 95. So whether I use the low of the last 72 hours, which is a pretty tight stop loss, 2 times ATR, which takes it to $95, or $1,000 loss on a $5,000 position is $87. Several different ways to calculate your exit before you ever get in your entry. All right, we ride that trend up, get a nice move to the upside, not enough to really say, hey, you know what? There's bullishness that I can move my stop loss up. So we let it ride based on where it is. We're going to use that 95 off of ATR. We get a pullback today. The low today was 106, not a pullback near my ATR, still a bullish trend. We're actually even on the day because we got in at 107, it's 106, so we're just just down a little bit, but not enough to exit that position. And what VantagePoint is saying is, based on what happened today, this trend is not expected to reverse. It's still expected to move higher. Today was a pullback on a down day. Now my stop loss has to be below my predicted high and predicted low. Right here, stop loss has to be below that. At 95, we know it's below that. It's down here, no concerns. 72 hours from my entry day, it's still below that. So no matter what, all the stop loss strategies we've talked about are good to go. What VantagePoint is saying based on this is that there's still bullishness expected to continue in this trend. So who was asking for ELF? Oh, Denny. All right, Denny, there you go, my friend. Some bullishness. Now, if we put on our support and resistance, we could also use that to set targets, which is a more advanced strategy for setting targets, but it's a good strategy nonetheless. And I can tell you that there is a target right there at 123.40. There's a target right there at 120.46, depending on whether I use support or resistance for my stop losses and my targets. Got a lot of different ways to do this. As you can tell, there's a lot of different ways to play this. You need to have a strategy, a trade plan, in my opinion, before you ever enter a position so that you don't change it on the fly. The problem that us traders have is we want to make as much as we can, and we make justifications and minimizations, and we make up new rules on the fly rather than having a set of rules that once I enter that position, I don't change for that position. Fine, you want to change it on the next one and optimize your rules? Great, do that. But why change the rules mid-trade just to make it better for you? Not something I'm interested in. All right, here is Macy's. So let's see. Oh, we got a lot of volatility here in Macy's. We got a whipsaw here, a whipsaw there. We got bearishness forecasted last night for today for Macy's. So no matter how you slice it, I can tell you one thing, that if this is a position that somebody is holding or looking at from this crossover back here, it is a sketchy position. There's so much volatility in this. I'd get worried about riding this position personally because of what's going on from a candle standpoint, but that doesn't mean it doesn't work for anybody else. I can also tell you momentum has been stuck in this channel for a couple of weeks. This is enough consolidation in this little window right here, folks, based on momentum. There's enough here to say, you know what? If I'm up, I'm up. If I'm in it, great. But there's enough here. This is where my technical analysis is saying, hey, just got rough and bumpy. Might want to think about managing your risk. Other people would say, well, I've got my stop loss down here. I'm okay just letting it ride until it shakes out. Great. Perfect. Use that strategy and don't change it in the trend, but just understand that that's one thing that you can do. So good. What else? Thank you. Oh, you're very welcome, Henry. I appreciate that. Thank you. Investing about options. Learning a lot. Good. Exit 10 days early. EXAI. Marky, I don't know if EXAI is in VantagePoint. EXAI. It is. It's in the healthcare sector. Let's take a look at it. It is not in the base package of VantagePoint. This is a special stock in the stock club. VantagePoint forecasted bullishness on 1010. Same strategy. I'm not going to walk through it just for time, but what VantagePoint is saying as of the close last night at 6:30, you can see it. The blue line is above. The neural index is green, indicating bullishness. Momentum is expecting higher. We have a higher high predicted for today, and we have a higher low predicted for today. Worst case scenario, it trades right within this range all day at 510, and you're happy. That's what VantagePoint was forecasting last night, and at 6:30 tonight, I'll get a new update. But right now, EXAI looks like there's still some bullishness left in it. So thank you for throwing that on the table for us to take a look at. Can you start with any amount of money? Start trading? Sure, you can start with no money. You can paper trade. We have users in VantagePoint that paper trade until they get all the rules set up. Absolutely. Nick, thank you. You have a great rest of your day as well. There you go, Denny. Up 1,600 on 3 contracts on ELF. Right there on that move alone. Nice work. Nice work. Yep. All right, good. I've hit all the tickers in the chat. I think we've had a good interaction. I've spent a lot of time digging into the details. Sorry if we got into the weeds, but I can tell you one thing. Here at VantagePoint, We want to help you be as successful as you can be, whether you're part of the VantagePoint family or not. For those of you that are part of the VantagePoint family, let me say one last time, thank you. And for everybody that joined our session today, I am going to sign off for the day. If you ever have any questions, our phone number is in the chat, or you can go to VantagePointForecast.com and reach out to us. We'd be happy to talk with you. But for now, I'm going to say thank you for letting me give you the view from my vantage point. And I hope everybody has a fantastic day and happy trading. See you, everybody.